Hello guys, today I'm going to show you how you get your valid order blocks and how you can use those order blocks to get very profitable setups. So number one, what you need to know about order blocks that you can trade from. Number one, should have a fair value gap. That is number one. Number two, should break structure or change character. Number three, to make it more powerful, it should have liquidity, inducement or liquidity below or above it, depending on the trend of the market. So in this case here, we are in a good downtrend, and so I'm going to mark my order blocks. After this break of structure, we have our inducement. This is an inducement. Why is it an inducement to me? It is an inducement to me because after this break of structure, we have this pullback, which is an incomplete pullback. If we take our Fibonacci retracement tool from up here to this downside here, we can see very clearly that the market, that this pullback, this small pullback, did not come 50% of this Fibonacci retracement tool. So I will take this as my inducement and then go up here and look any order block that has a fair value gap, and after that you mark that order block. So in this case here, you can see very clearly that the market came back this order block, tapped in, and then rallied down to break another structure. So this next setup here, in this next setup here, let me remove this. So in this next setup here, after this break of structure, you use the same method. You find first your inducement. Where is your inducement? The inducement in this case, we have an inducement here and we have another inducement here. So why did I use this as an inducement here? This is an inducement because this is a pullback. This is a complete pullback. Yeah, this is a pullback. So that's why you can see here the market reacted from this order block. If I can mark this order block, that's why this order block made the market to react. So you can see very clearly here. That's why this order block reacted. The market tapped into this order block and then reacted to the downside. So, but for me, I could not take any trade from there. So I waited for this extreme order block. Let me mark it. It is a very clear order block, the extreme order block. So I used this inducement here, this pullback here as my inducement. So, for other traders, depending on how you approach the market, this for other traders, this is liquidity, this is liquidity, this is liquidity. Liquidity is where stop losses are, where the money is. So, for me, I waited for this order block. You can see very clearly the market came back up, tapped me in, and then rallied down. I think this was news here. So the market, after tapping me in, the market rallied down to break this structure. After this break of structure, I came back up here again and then marked my order block. This is a order block. This is the only order block that has a fair value gap. So I marked this order block, and I was expecting the market to form liquidity first below this zone, below this zone. So I was expecting the market to form liquidity first or an inducement first before coming into this order block. So here, uh, if you go to a lower time frame here, you can see this here was a ranging market in a smaller time frame. So the market formed liquidity up here before going down and then came back to take this liquidity and then tapped in this order block. That's why I took another trade from this zone. So after the market tapped into this zone, the market rallied straight break another structure. That's how you get very very good order blocks to trade from. It's a very very clear strategy. It is SMC, pure SMC. So if you understand these things, you are good to go. Make sure you understand order blocks, you understand inducements, and you understand correct pullbacks, incorrect pullbacks, and break of structure. So if you know all those ones, you are good to go and you will be trading very very good. So thank you guys for watching this video, and if you have any inquiries, you can reach me out. So yeah.